And right now we are 2 minutes away from the end of the trading day. A shot of beautiful San Francisco. Romaine Bostick here in Studio 2 in New York alongside Katie Greifeld as we take you through to the closing bell. It's our global simulcast in San Francisco. Today is Massar and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. We have a lot to discuss here with the Nasdaq 100 down 4.6% heading into the close. The S&P down 2.5% and the Russell 2000 right now down 3.5%. Tim, Carol, you are sitting right there in the heart of our tech industry, of our tech economy, and this sell-off is undoubtedly one about tech valuations.
Yeah, absolutely, especially in a higher interest rate environment. We've seen, I'm sure we're going to talk a lot about U.S. yields and expectations for what the Fed will do. But yes, it makes those pricey valuations look different. But you keep, I think, at the Bloomberg Technology Summit we covered yesterday, there is still so much in terms of conversations about demand outstripping supply. That's what we hear fundamentally. But right now, certainly investors may be questioning some of that against the valuations.
Yeah, I mean, the superlatives here are pretty remarkable. At one point today, you had the worst sell-off going back to Liberation Day for the Nasdaq 100, down more than 4.5%. It's recovered some of those gains. Broadcom shares are lower right now by 7.6%. They fell by 12.6% yesterday. Oh, the worst two-day period for Broadcom ever. So, yeah, even though we're seeing, we saw some big gains, we're seeing some pretty big declines.
Yeah, we should point out, though, we are seeing some selling pressure into the closing bells here as you hear them in New York. And, of course, you know, there is an obligation to clap and cheer, but not a whole lot to clap. And I do just want to reiterate some significant selling pressure in this final few moments here on this Friday afternoon. The Dow Jones Industrial Average, for the most part, is kind of the least dirtiest shirt in the drawer. It is down 694 points, or about 1.3%. The S&P 500, it's a drop of 200 points, or about 2.64%. The Nasdaq Composite, down 4.2%, and the Nasdaq 100, which is your primary decliner here on the day, that's down 4.8% to close out the day, the worst one-day drop since that 6% drop on April 4th, 2025, when everyone freaked out over those Liberation Day tariffs. Your Russell 2000, it's down 3.5%. The S&P 400 mid-caps down 1.9%. And I do just want to throw in a rare bright spot on the day, and this one is for you, Katie Greifeld.
Please.
And that is the Dow Transportation Average, which ends the day higher.
No kidding.
Not only higher by 0.6%, up 140 points. But once again, guys, this is really about the sell-off that we're seeing in the other benchmark indices.
All isn't lost.
Yes, indeed. And yes, indeed, a sell-off. But you take a look at the S&P 500. It's not like everything was down today. It's almost an even split, which I think is really telling. Katie, you've got 237 names in the S&P 500 actually higher for the Friday trade, 266 to the downside. So again, not everything and not everybody was running for the exits.
Absolutely. I mean, some of your more defensive sectors, when you take a look at the circle, definitely had a pretty solid Friday performance. Consumer staples higher by about 1.6%. Utilities, 0.8%. Real estate, healthcare, and financials also in the green. But then you take a look at what's on the downside. Tech as a sector down 5.8%. Even, you know, the best day ever in consumer staples, it'd be hard to sort of counteract that.
And I just want to add that on the tech side, the Philadelphia Semiconductor Index, of course, 30 chip stocks, all 30
Don't you
down.
dare.
And Tim Stenovec, I'm stepping on your toes, a 10% drop. That's the worst day since 2020.
March 16th of 2020, to be specific. You all remember what happened then. Everybody was freaked out about COVID. You know, today should be a day. Today should be a day where the decliners go first. But I'm a gentleman. Carol Massar will have.
I'm the optimist. I'm just going to go for it.
Let's hear about it. What is this, like tin can soup?
Exactly. It is really funny to go for the gainers and what gained. Although everybody knows Chipotle Mexican Grill. Look, not a bad trade. It was up as much as 7% at its highs today, finishing with a gain of more than 4%. JP Morgan upgrading to overweight from neutral, citing a rare valuation opportunity for the stock. The analyst John Ivanko saying that the stock's multiple now has fully re-rated to reflect a more moderate, yet still well above average growth profile. Price target set to $35 a share, implying a 24% increase from the Thursday close. You can see the stock closing just below $30 a share. All right, let's get to the number one. Let me just double check. Yep, it's the number one gainer in the S&P 500, Cooper Companies.
Yeah.
We don't talk about this one a lot, right?
We do not.
Top in the S&P after the contact lens maker, it's also a medical device maker, posted second quarter sales and adjusted profit that topped estimates. Company also gave updates about its ongoing strategic review that analysts found encouraging. It's about a $13 billion market cap company. If you're not familiar, it is still down about 18% year to date. Do you have something you want to add?
Well, we're familiar with it. Yeah.
Oh,
that's
you?
your leader.
Okay.
That's your leader in the
Isn't
S&P
it- but
500. You're encouraged by
and
this.
I think it's kind of I think it's fascinating. If you go to the Nasdaq gainers, Mondelez, Coca-Cola Enterprise, like these are not high-tech companies. Like I thought it was kind of interesting.
And same thing in the S&P. It's FedEx Freight, it's Clorox, it's Kenvue, it's Kimberly-Clark. So we see where investors' minds are at. Yeah, they did not go to cash, but they're going into some of the more defensive sectors.
Right, which is telling, right? They're willing to look at some other different names and, like you said, not putting cash under their mattresses. Hey, for something different, something small.
Even from 2,500 miles away.
Can I just tell you, I was just at a family wedding. They're like, what's with the dude who always gives you a hard time? I'm like,
They said Tim? Did you Tim?
No. And I'm just like, truly a teddy bear. When you scratch below the surface. Here's for something.
It's hard to get there, though.
Actually, you need kind of a pick to kind of get to it. But hey, we'll move on. A small cap company, because Romaine, I know you love them. It's a $907 million market cap company. Wow. Merlin. Ticker, I know, I had to dig. MRLN, it's a software company involved in the aerospace and defense tech areas. Rallying big time today as we bring it up almost 20% here after it announced the successful completion of the critical design review for its C-130J autonomy program with the U.S. Special Operation Command. I thought that was interesting in terms of what's happening with defense in particular. Stock's still down by 18% with about 5% of the float is short. Take it away. Decliner man.
All right, well, not everything is lower today, but some prominent names lower. Let's go to the SOX, down more than 10.2% today. We'll go ahead and round that up to 10.3. Worst day going back to March of 2020 during the COVID scare. Every name in the SOX is lower today. You've got Marvell down more than 16%, Micron down more than 13%, AMD down more than 10%, Intel down 11.3%, Broadcom down 8%, NVIDIA down 6.2%, Qualcomm down 11%. The list goes on. I could give you 25 more names that are lower in the SOX today. Tech stocks broadly lower following that latest jobs report. Added to speculation that the Fed's next interest rate move will be a hike. Let's change gears, though, and talk a little bit about retail. Earlier in the session, one of the worst performers going into today would have been Lululemon, not the worst performer, but it was down throughout the day today. Closed at 8.6% lower. This lowest levels in more than 8 years after the company cut its annual forecast due to deteriorating performance in North America. The company now sees revenue in the range of $11 to $11.15 billion for the fiscal year, down below the average analyst estimates compiled by Bloomberg. The company says it's been contending with increased competition, poor product launches, and negative commentary in the media and social media, which has led to lower store traffic and lower sales. And finally, I can't believe we haven't talked about Bitcoin yet. It fell below $60,000 for the first time going back to October 2024. This is the iShares Bitcoin Trust ETF, otherwise known as IBIT. Down more than 5.2%. This leg lower fueled by a combination of investors pulling money from Bitcoin-tied ETFs such as this, renewed geopolitical tensions, growing concern about the durability of one of the market's most important sources of demand. I think big questions about what happens with all these retail investors who may have been putting money into cryptocurrency when we have some big AI companies that are going public, not just next week, but in the next few months.
Well, and let's talk about next week. And I just want to check on the yields real quickly, and particularly focusing on the two-year yield, because that spooked a lot of folks. A 12 basis point rise in the two-year yield to roughly about 4.6%. And this is the idea that with that strong labor market report, the idea that the Fed might be in a position, well, certainly in a position where they maybe can't justify cutting rates, but even potentially they may have to raise rates. And that's kind of the backdrop for next week, because we are going to get a CPI report, a PPI report, both expected to be hot. We're going to get another read on consumer sentiment, which is expected to be low. And, of course, this market is going to be asked to digest not only the biggest IPO ever, but let's just call it what it is, probably one of the more lopsided public offerings, at least in terms of who gets what and, well, where that wealth accrues.
Yeah, it should be an interesting week. A lot coming at us.
Yeah.
I know.
There's
All
a
right,
headline
I
in
guess
Goldman.
we have.
Do you want to read that one out?
Yeah.
Yeah, I actually do.
Go for it.
This has to do with the lawyer, right, over at Goldman.
Yeah,
and
Kathy Remler.
Kathy Remler and the Goldman CEO asking her to stay at the firm despite some of concerns over her relationship or connections with Jeffrey Epstein. So
We're going to be speaking with Jason Leopold in our 4 o'clock hour, just in a few minutes. He's the author of the FOIA Files newsletter, and he's been all over this story. So tune in for us. I know you guys are busy over there in New York, but we're doing fun stuff on Bloomberg Business Week Daily, too.
Sounds awesome.
they can be. Romaine
Yeah.
can be fun. I know Katie can be fun. Romaine,
Look at him
Romaine
smile.
is a lot of fun.
Hey, Romaine. All right, we have to
I
go.
had a
You have to go.
flourless
All
cake
right.
today for some reason.
Just chocolate.
Is that why you're so cranky?
Yes.
Oh, did I say that out loud? All right, have a
Just
good and
tired,
safe
you know.
weekend. Yeah, I know the feeling. All right, guys, have a good and safe weekend.